You had a couple of things going on. The situation with Boeing, as you aptly pointed out, has made the market a little less stable than you would like to see it. Secondarily, technicals worked into it. The S&P found resistance up at its 200-day moving average, and that kind of disheartened people. The Dow has been the weakest of the lot all the way through, so I think I would be a little suspect. Shortly after the close, we're going to get inventory numbers on oil, and oil took a real pasting today, and if those inventory numbers are big, that could be a continuation of one of the biggest sell-offs in oil that we have ever seen.
Rick, as Steve mentioned, we've got a number of speeches this week from the Fed chair. What are you looking to hear from him about in particular? Do you think the oil aspect will come up?
You know, the problem is we've all gotten used to food and energy. Commodity prices tend to be volatile. Add in what the dollar's doing, that's even more volatility. Add in the fact that there's a lot of counterintuitive relationships with commodities denominated in the dollar, and then risk aversion trades. It's a mess out there, and I really think that Jay Powell and company aren't going to give us a lot of clues because there's not a lot of new clues to really share. I know we're all thinking that he has some magic information that he's not sharing with us, but I don't think that's the case. I think the dollar especially is one of the offshoots of the removal of stimulus by the Fed, but there's so many others. Consider, there's now 350 basis points between our 2-year and the European 2-year. There's 275 basis points between our 10-year and their 10-year. That has created a rebirth using the euro currency because of the perceived weakness of Mario Draghi actually may be doing more stimulus for a new carry trade. But that carry trade moved right into a wall of risk aversion. Then add in all the borrowed dollars that have finance structures through various swaps and other derivatives that are just overflowing, and European banks' balance sheets can't handle anymore. It's almost the perfect storm. And if anyone thinks that the Fed is going to do anything to calm the dollar or be able to have a major influence on commodities, I don't think so. I think the dollar right now is destined to continue to improve based on all the factors I outlined. I do think that as we get into 2019, there may be a pause. We all talk about 5% up on the dollar, double that from the lows in February, and that was a quick jump from February. And I think that's really where many of the problems with the dollar, borrowed dollar structures have run into problems. Remember, if you need dollars to finance positions and the positions are falling apart, you have two problems.
And Quincy, to that point, I mean, you've got the strong dollar, you've got the Fed, you've got the sell-off in crude, you've got the latest with the trade talk headlines, geopolitics. I mean, I could keep going down the list. What are sort of the biggest things you're watching? And in light of that, how should investors be positioning themselves right now?
Well, clearly investors are, trying to be defensive. I mean, it started early on as semiconductors were selling off, and healthcare, large cap healthcare got the bid. They had been dormant in large cap space, and then gradually more and more defensive until consumer staples ultimately came into the leadership of the market. That tells you this is a nervous market. So we would be careful, look for quality, good cash flow, all the things you do when you want to wait and see what's going to happen. But clearly the dollar is very important. And other reason I mention, and in addition to everything that Rick said, we're going to have a parade, a litany of Chinese data coming out. If China continues to weaken and they cannot stabilize that economy, they are going to be forced to devalue, just let the currency weaken a bit more. That pushes the dollar up, it puts pressure on emerging markets, and it's difficult for global markets. We're witnessing a stronger dollar takes a risk off in global markets.
Do you think there's still a seasonality kind of tailwind to the market at the moment, that we're meant to have a year-end Christmas rally, or the fact that we sort of already tried to have one since the October low and have pulled back again? Do you think that's now a factor that's disappeared?
Well, I wouldn't call it completely disappeared, but it may be delayed. I think you want to wait till after Thanksgiving, get a little closer to Christmas. We've got to restabilize the market here. It had a terrible shock in October, and it hasn't fully recovered. And until you show some signs of bottoming, it's going to be tough to get Santa Claus or anybody else to the rally.